Chapter 12, Part 2, Effects of Trading Available for Sale and Held to Maturity Debt Securities on the Financial Statements. This is similar to your homework. So again, we're talking about our three types of securities, and we're going to work through some problems so you can see how these appear on the financial statements. Again, we have this only for debt. We have held to maturity trading and available for sale. Now, held to maturity, this is only bonds. You can't, because stock, they have no due date. On the income statement and the statement of comprehensive income, gains or losses are shown in net income in the period in which they're sold, otherwise not at all, but any unrealized holding gains or losses can be disclosed in the footnotes of the financials. They have no effect on other comprehensive income. On the balance sheet, investment and held to maturity securities are reported at amortized cost, and the fair value of these investments are disclosed in the notes to the financials. On the cash flow statement, cash flows from buying and selling held to maturity securities are classified as investing activity. However, any interest that you earned is always part of operations. So let's look at our example. We have my company. They purchased $100 million, 8% bonds. They pay interest twice a year. The market yield is 6, and they paid $110 at the end of the year. It had a fair market value of $105 million. They have intent to keep them. What are the journals for the purchase and interest payments in year 1? So, for the purchase, it would be investment in bonds, which would be the face of the bonds. The cash is what you paid for it, and the difference, again, in this case, is a premium. Interest received the year using effective rate, the first one. Now, interest revenue, you have to use this number for the income statement. The cash is what you're going to use on the cash flow statement. And then premium on bond, which is going to be the difference between the cash and the interest revenue. And remember, the interest revenue, it's the effective rate. It's the net book value of the bond times the effective rate divided by 2, since it's semi-annually. Now, interest revenue is going to be different every single time. So the second time, it's going to be a different amount because we have to adjust for the previous amount that we reduced the premium on bonds for, which is 0.7. And now the plug is going to be premium on bonds. Adjustment to fair market value, we don't do this, not when they're held to maturity. Now, what does it look like on the financial statements? On the income statement, we would see interest revenue. This is for the 2 interest amounts that we received, and that's what's going to be on the income statement under other. There's nothing in other comprehensive income, and on the balance sheet, the investment would show at its net book value, which would be what you paid for it, plus the premium and minus the 2 write-offs or the write-off of $1.7 million. And on the cash flow, under operating activities, you'd show $8 million, which is the cash received, and investing activities, you show the outflow of what you paid for the investment. Now, what about the next one, available for sale? Available for sale, the income statement and statement of comprehensive income. Gains and losses are shown in other comprehensive income in periods in which the changes in fair value occur. Those amounts are reclassified out of OCI and recognized in net income in the periods in which securities are sold. So it's only recognized on the income statement when they're sold. It's part of other comprehensive income while it's held. Balance sheet investment is going to be shown at fair market value. Unrealized holding gains and losses become part of accumulated other comprehensive income, which is in the shareholders' equity section. Cash flow from buying and selling available for sale securities are classified as investing activity. Again, any interest revenue is part of operations. Now let's look at a problem. same one. So our journal entries are exactly the same. We book our investment. We book our 2 interest amounts that we received. However, what we do have to do is adjust to fair market value. So it says that it has a value of $105 million. Our net book value is, I think it's 108.3. So we're going to have to write off $3.3 million, and the offset is going to be fair value adjustment. Now remember, that amount that I'm showing there, you make sure you adjust for both periods. That's a problem. People have in the homework, they forget that. Now, what does it look like on the income statement? Other would have interest revenue. Other comprehensive income would have unrealized holding loss. The balance sheet would show a non-current investment of $105. The cash flow statement would be the same as it is for held to maturity. You'd show your interest revenue plus your investing activities. Trading securities. Income statement and statement of comprehensive income. Gains and losses are included in the income statement in the periods in which they fair value changes, regardless of whether they are realized or unrealized. Does not affect other comprehensive income. With respect to trading securities, because of all changes in a trading security's fair value are reported in earnings as they occur, the sale of a trading security does not necessarily give rise to a gain or loss. On the balance sheet, it would all show as part of, it would be a current asset, and for cash flow, since it's a current asset, it would be shown as part of operations. So same problem. We're going to show the purchase and again our 2 interest payments. We're going to adjust to fair market value. So far it's the same as, except that the unrealized holding loss is going to go to net income instead of other comprehensive income. So this is going to appear on the income statement. So on the income statement under other, we would have interest revenue and then unrealized holding loss. On the balance sheet, we would see a short-term investment of $105, and on the cash flow statement, everything would be part of operating activities. And that concludes part 2 of Chapter 12 presentation.